TradeCaptain.com, and we're going to provide you guys with a quick update on the markets. But before we start, as always, I need to stress that trading financial markets is unfortunately risky, and there's a genuine risk to lose all of our invested money. If you want to know more about this, don't forget to click on, or you can click on risk disclosure statement on TradeCaptain.com. Okay, good. So I want to welcome you guys to the live trading room. It's starting a little bit late today. Sorry about that. If you want to say hello, you can always use the chat. You just need to log in via YouTube and just say good morning or hello. That's always nice. And if you're new to this is a webinar we host in this page 9 a.m. Monday to Friday. Okay, let's begin. And we're going to begin with the euro, which is unfortunately a bit boring. The market moved down to support and he's trying to carve out a low. So it's not a big difference here compared with what we've seen in February and then here in January. And we just need to be patient. There's no real reason here to change our bias as long as trade above this low. So with that in mind, I still maintain a bullish bias. I do think this could head to the upside, but it's obviously taking its time. Now, an indication that the market is really ready to potentially push to the upside will be if we break above this high here from February 21st. This high, which is at 123.63, is more or less the high from last week's Fed rate minutes. They were released. The market spiked to the upside, and then it moved down again as the market is anticipating rate hikes in the US. Here's the price of Bitcoin. In Bitcoin, I think it is trying to carve out what would be like a right shoulder of this inverse head and shoulders pattern. So you have one level up here, another level here. This is the neckline. Take this level out, which is pretty much 11,775 or so. Then it can head to the upside. And could potentially go all the way out to the prior, not all the way out to the all-time high, but maybe all the way up to the highs here from January 7th. In the short term as well, it looks right now that we have ended this real little downtrend here. We had a downtrend in place here, and the market, moved above the high here, which is the important level. And it could now be that we have formed a low here. So it could be that traders just gonna look at this. They're gonna take a fib from the low to the high, and then looking to potentially see this head to the upside. So am I correct? I'm not sure if we're gonna correct 50% because this is Bitcoin at the end of the day. It's not a euro or dollar, but something like this, like that. What is also interesting is that you might remember I proclaimed this market being bullish on the break here. I bought myself here for the move to the upside, and I say we could go down to the entry, but maybe looking to bottom out. So from that perspective, it looks at least that we've been saying so far here has been working out all right, which is good. So again, maybe this is the actual low. Maybe we'll just have 50% pullback, and then traders try to build a position again. Here you're looking at a risk of about 8.5% for a potential return of 17.5. So that's more than 2 times your risk, which are good risk-reward ratio levels. However, though, you can probably just hear in my voice I'm not super excited. Well, the reason why I'm not super excited is that there's also a risk here that it all just turns into a choppy sort of market here, where a low here, this doesn't hold, but instead the market tries to trade a little bit lower, but doesn't actually take out any major levels, just goes down a bit and then rallies higher. So I'm not super enthusiastic for this current pair right now, but it's looking encouraging. I do suspect that it bottomed out here, but I wouldn't be buying a lot down here. In fact, I'm not even planning to buy right now. But it does look to me though that the trend could go down a little bit and then up. Sorry, the price, that would be, not the trend. Here's crude oil, which is progressing well, as anticipated. The market created a low here and moved to the upside. In fact, we've been bullish from down here. Now, as you know, I've been cautious as we're approaching these highs, and we need some sort of a pullback, and I was hoping for a pullback already yesterday to 62.60, and then the market could potentially bottom out here and head to the upside. But as you can see here, the market is not really up for that right now. It didn't actually want to go down. However, doesn't mean that we should be buying up here. Doesn't make any sense. So I'm looking for a corrective move, maybe down 62.60, and then from this level, I suspect traders gonna buy a bit more, and then maybe it'll head to the upside 65.37, and then we'll see. I'm not sure if the market is ready to stick out this high. It could be, but I think we can move up maybe to 65.37 or so. That would be fair. Here's the price of gold. Looks no different to what's going on with euro dollar. The market, let me see here, is bullish. You know, it's bullish above this level here, right? It should be quite straightforward for most people to see. And the idea is just that above these levels, the market should bounce. So obviously the market was so bullish a few days ago. So when it was trading here, I said, well, if we just go down a little bit to 13.38, you know, would be fair for the market to bounce. But it moved down lower. However, we never got stopped out, so nothing has actually changed here. So I think down, I mean it went down lower, and then we showed you a different sort of entry down here at 13.31. So the idea was traders that are not long and they're looking to buy, they could potentially buy here. That would be the traders that didn't buy up here already. And so far looking alright. You know, people are buying at these levels, and I suspect they will continue to buy at these levels. And I still think they're gonna put the stop losses down here. Then they're gonna target this high up. Now I want to show you something before we look at the DAX 30. And that's the dollar index, the DXY. It's a combination of many different currencies. Now this is the dollar index, and if you've been following me, you know we had a very good November and December, and even January, and we even made some okay bets on this little bounce. Now going forward here, I mean actually if we take a look at it from a bigger picture perspective, this is the weekly chart, and we had a very steep, very nice decline here, trading sideways on the weekly 2015 all the way up until recently, and it could go down lower. It could go down to 84.85. You know, the White House, they don't want to see a stronger dollar. People are aware that the US is increasing interest rates. However, though, people don't care. There's a strong disconnect between interest rates right now and the dollar. It could of course be that they link back, but right now people don't care. Maybe they're focusing more on the fact that the White House wants to see a lower dollar, or maybe people think, and this is actually not uncommon, you might have heard about the inverted yield curve, which just means that the short-term yields are higher than long-term yields. And this is something we've been seeing. And today, as an example, if you buy like a 2-year government bond yield, and then you might consider, oh, maybe I should buy a 10-year government bond yield. So either you lock up your money for 2 years or 10 years. There's not a big difference in what you get by holding a 2-year bond yield versus a 10-year. And obviously it's a big difference between what's going to happen in the US over the next 2 years compared to what's going to happen in the US in 10 years, right? So you're not getting actually paid well enough for holding long-term or like longer-term dated bonds. What does that tell me? It tells me that maybe people think, yeah, okay, the Fed is going to increase interest rates, but eventually they're going to be forced to lower them again. Why would they be forced to lower them again? Well, because most likely they will increase interest rates. They're going to cause an economic slowdown, and that is going to cause the Fed to potentially cut rates, which will happen eventually. I mean, it's quite likely that what the Fed is doing is going to hurt the economy at one point. So, maybe that's why. We don't actually know. But what can I say? Well, if the market suddenly starts to think that we're gonna have a reconnect between that the dollar's undervalued versus interest rates, then yes, we're probably trading at 93, 94. And signs of that actually starting to happen is if we take out the 90.61 level, which is also the February 8 high. Those are similar levels to the 122 in the euro, similar levels to the 1,300 level. Sorry, what is it? Yeah, 1,000. Yeah, 1,300 in gold. It's just those levels we're watching here. So in the case of the dollar index, if we take out 90.61, they're most likely going to see more of dollar strength, probably up to 91.72, followed by 92.66, which is this high here from January 9th. However, though, until that happens, we're stuck in some sort of a bearish trend with a range since January, and it's going to be difficult, but eventually down. Okay, so that's why I'm still bullish the euro, still bullish the pound, still bullish the Aussie and the New Zealand dollar. Why? Because the charts here are still bearish. Let me see. This is the DAX. So the DAX, it's moving higher, right? That's good. That's what we've been working with. And for now, there's not too much for us to do. And the first idea was just to buy down here, and then we said maybe buy here at 12,370. If you bought here or here, you should be up. And we're just waiting for this to head to the upside. I think it could go a little bit higher. 12,655, followed by 12,824. And if it spikes down to 12,370, then I still think traders are gonna look to buy back. And that is today's outlook for the major markets. If you're interested in more analysis like this, then we do offer Q&A sessions in the premium section here. So in the premium section, we have our quarterly outlooks, trade signals from Trading Central, odd charts, Clausen horns, available in several languages, and we have this, which is chat with our strategist. So we're hosting a session here in 2 days, and most likely we're gonna host them more and more frequent. However, though, the website here just started in August, so it's quite a new website, and we don't actually have the manpower to do this as often as it would make sense. But you have it here if you have more questions as well. Here, Trading Central is something that I learned about already in 2006, and they provide some nice setups. They haven't necessarily improved since 2005 because they started to become more short-term, but they still provide some decent levels, like here in crude oil, like which levels to focus on if you're trading short-term. The style, though, is the same. It's just that they're much more short-term, and then you have auto charters and Clausen horns here as well. If you like this sort of webinar, if you like the stuff I'm doing, then we have another webinar coming up. It's called Trading Forex with LED Waves. Did the presentation about 6 months ago as well. It's an introduction to LED waves, how to count waves, and some of the patterns that people follow and use. I don't actually trade with waves myself, but I'm aware how they work. And as I usually say to people, before I started trading, I was very as soon as the market just moved against me, I would start to get nervous. I was worried that I would buy, for example, this is just paint, by the way. I would buy, for example, the market. I would buy the euro. Say the euro trades sideways, right? And then non-farm payrolls are bad. The market goes to the upside, and then it shoot up, right? And then I was like, then the market started to move to the downside, started to move back to my entry, and I'm like, wow, what's going on here? Like, the non-farm payrolls are terrible. Why would anybody, sell the euro dollar? And obviously you would get stressed because of that, because you don't understand, or I didn't understand, that these sort of corrective moves and these sort of waves, they're actually part of trading. They're like the waves of the sea, right? And when I understood that there were people out there that spend their life trying to analyze these waves and trying to make sense of it and kind of put some sort of structure to it, I learned a bit about these structures. I learned like what are the patterns, and from there I started to see these moves as an opportunity instead of a risk. So every time I buy at a breakout now and I see the market goes to my favor and then goes down, I don't actually get nervous, because I know it's just part of what it works, the way the market works. And of course I set up my Fibonacci, so I kind of know where the market should bounce from. I kind of know levels where it should not trade to, so where to put a stop loss, and I know where to add to the position and things like that. And that comes after watching, reading a book actually. This is way before YouTube was readily available. And I read a book about it, and I understood better what it was all about. So you're most welcome to join me for this webinar. It's actually free to join. You just need to click here, education, and then webinars, and then sign up, and that's it. Okay guys, have a great day, and I'll see you guys tomorrow at 9 a.m. London time for another market update. Thank you.